Good afternoon, everyone. I am here as usual on Thursday afternoon, 12 p.m. CST. Every week, we are coming here with some new topic. Our objective is to bring the awareness in our community about tax and finance topics. There are a lot of complex topics also. We are putting efforts to simplify it for you so that the better you understand, the more money you may be able to save it. The every dollar you save, yeah, you save in taxes is equivalent to every dollar you are earning it. So as usual, here today with a new topic today, simplifying tax brackets. Whatever money you make in America, taxable income, you need to pay taxes. But the what percentage of taxes you are paying will differ based on what income level you are. So that is why we are here with our topic. And today, I mean, as everyone knows about me, but if anyone newly joined, so just my name is Anil Grandi. I am the CEO for AZ FinTax. I am in this industry on the tax, finance, and accounting for the last 20 years plus, and we have been offering tax planning, CFO services, and also tax returns filing services. Along with me, my colleague Abhishek Gandhi, CPA, our tax director, is also here to share our knowledge with you. And Abhishek,
Hi
hi
Anil.
Abhishek,
Hello. So,
hi
hello
Abhishek. Yeah,
taxpayer.
thank you.
Yeah, sorry. But hello taxpayers. Today, I will simplify U.S. income tax brackets for you, as Anil mentioned. This is going to be an in-depth analysis. Stay focused, and we are going to talk about it very, very detailed. So, so we will look into the intricacies of the US income tax system, specifically focusing on the structure and implication of income tax brackets. This exploration will illuminate the mechanics of tax brackets, the nuance of effective and marginal tax rates, and the significant impact of deductions on your tax liability. So let's start with the concept of income tax brackets. So income tax brackets from the cornerstone of the progressive tax system employed by United States. This brackets represent specific range of income, each taxed at distinct rate. So these distinct rates are different, of course, and from it is different for person to person. And understanding this concept is crucial to grasping the equitable distribution of the tax burden across various income levels. I will explain this with an example. Okay, so consider a single filer in the year of 2023. We just passed 2023, so let's take 2023. The first 11,000 of taxable income is taxed at the modest rate of 10%. The subsequent portion, anything about 11,000 up to extended up to 44,725, is taxed at 12%. Now, this pattern of increasing tax rate continues and culminating in a top rate of 37% of income exceeding $500,000. It is $578,000 and 125 some change. So this tiered structure ensure that different segments of your income are taxed at progressively higher rates. rather than applying a one single rate to your entire income. That is why it is called a progressive tax system. If you will see in a picture, then the progressive people are advocating for progressive tax system. It is designed to levy higher tax rates on those with a greater incomes, thereby promoting a fairer distribution of the tax burden. As your income tax or as your taxable income rises, so does the rate and at which your income is taxed. This approach ensures that higher income earners contribute a larger share of their income in taxes compared to those with lower income. For instance, again, an individual earning $75,000 annually does not pay the same tax rate on every dollar earned. Instead, their income is subject to progressively higher rates as it ascends through the tax brackets. This structures this structure ensures that while higher income individuals pay more in taxes, lower income individuals are taxed at reduced rates and reflecting their ability to pay. Now, now, what is the effective tax rate and what is marginal tax rate? People always confuse with what is my effective tax rate and what is marginal tax rate. A comprehensive view. I'll give you very comprehensive view. While the marginal tax rate applies to the last dollar of your taxable income, the effective tax rate provides a broader perspective. This represents the average rate at which your entire income is taxed, offering a clearer picture of your overall tax burden. So, so how would you calculate effective tax rate? It's very simple. To calculate the effective tax rate, you divide total tax paid by your total taxable income. And the percentage, the number you get, that is your effective tax rate. For example, if half of your income is taxed at 10% and other half at 12%, so your effective tax rate would be around 11%. This distinction highlights that even if you fall into higher tax bracket, your overall tax rate may be significantly lower due to the progressive nature of tax system, right? Now, what is the marginal tax rate? Your marginal tax rate is the rate imposed on the last dollar of your taxable income, reflecting the highest bracket your income reaches. You may wonder why marginal rate is important. I'm not paying taxes at the marginal rate. The marginal rate is crucial for financial planning and decision making, especially when considering additional income or potential deduction. Again, let me give you same example. Consider a single filer with a taxable income of $75,000 in 2023. Their marginal tax rate would be 22%. If their income increased by $10,000, this additional income is still taxed at 22% rate as it falls within the same bracket. However, if their income rise to 98,000, the excess beyond the 22% bracket would be taxed at 24%. Thus, while most of their income is taxed at 22%, their marginal tax rate climbs to 24%, thus illustrating the progressive tax structure. Now, also look at the spectrum of tax brackets. Now 23 is all is most of you must have filed your tax return. So let's talk about 2024, that how much, what will be the tax bracket for the tax year 2024. So there are 7 federal income tax brackets ranging from 10% to 37%, almost same as 2023. I said almost because because it is impacted by inflation and some other factors. So the amount is changed. This brackets vary based on taxable income and filing status, such as single, married file jointly, or head of household. So let's take a closer look at 2024 tax brackets for single filers, right? We will talk about single filers, and then accordingly we will find out what is for the joint tax filer. But single tax filer will be able to give you more closer idea. So 10% on income up to 11,600. Okay, 12% on income over 11,600 up to 47,150. 22% on income over 47,150 up to 100,525, and 25% on income over 100,525 up to 191,950. 32% on income over 191,950 up to 243,725 up to 609,350. And the highest bracket, I said all this number because I wanted to drive you through the 37%, which is on income over $609,000. So this brackets ensure that individual with higher income pay progressively higher tax rates, reinforcing the progressive nature of the system. We all like tax deduction, don't we? So why we like tax deduction? Because deduction play a pivotal role in reducing our taxable income, thereby lowering the amount of tax we owe. By decreasing taxable income, deduction can also shift you into a lower tax bracket for the reducing your overall tax rate. So for example, again, if if your highest tax bracket is, let's say, 32%, and you claim $1,000 deduction, okay, so you would save $320 in taxes, correct? Conversely, if your top bracket is just 12%, so the same deduction would save you $120 instead of 320, right? So this exemplifies the value of deductions in minimizing your tax burden, especially when you fall into a higher tax bracket. Deduction encompasses a wide range of expenses, including mortgage interest, medical expenses, charitable contributions, and many business tax expenses too. So it is essential to maintain accurate records and understand the deduction you qualify for, maximize your tax savings. I always say save your records. That is very, very important. Now, in conclusion, understanding how income tax brackets function within the US progressive tax system is vital for effective financial planning and tax management. The distinction between marginal and effective tax rates provide clarity on how different portion of your income are taxed, while recognizing the impact of deductions can further optimize your tax situation. By familiarizing yourself with this concept, you can navigate the complexity of the tax system. So make informed financial decision and potentially reduce your overall tax burden, whether you are a high income earner or someone with a more modest income. Comprehending this tax principle can help you leverage the benefits offered by US tax system, ultimately enhancing your financial well-being. So this is it. I hope you must have enjoyed it. Thank you for your attention. And I hope this session has provided some valuable insights into working of US income tax brackets and their implications on your financial planning. I'll take you back to Anil Gandhi, our CEO at AG FinTechs, who will provide more insights on how you should navigate the tax system. Over to you, Anil.
Thank you very much, Abhishek. Very detailed level you explained, and thank you. And at the end, if you look at, as Abhishek said, it's about how you need to understand how the taxes works. For every dollar you are earning, you are paying 30, 40, 50% in taxes. So you have an obligation, you have to know what you are paying. You should know the difference between marginal tax rate and effective tax rate. It's not for you cannot say that, okay, I am paying $30, $40, 50, 30, 40, 50 in a flat. It's not flat, it's at the marginal. But what is an effective tax rate for overall? How much, what is the percentage of the taxes you are paying? You need to know. Only when you know how much taxes you are paying, you know the pain for on the cash outflows. Very important. Tax planning plays a key role. Always our tax planning should be proactive, not reactive. You can do better, you can save money more, you can have a better cash flows on year basis only with proactive tax planning. If you are looking for a proactive tax planning, we are always here for you. You can just reach out to us at hello at agfintax.com, and we are always here to help you. And again, next week we will see you with some new topic on Thursday afternoon, 12 p.m. CST. See you. Bye bye. And if you have any questions, I would like to answer, but I don't see any questions. I will just wait for a couple of seconds. If I see any questions, I will answer. Okay, I don't see any questions. I hope the sessions are very helpful for you, and we appreciate your feedback. And if you are looking for any new topic, feel free to post the topic name in the comments box. You can post these messages in every way in any of our social media channels: YouTube, Facebook, LinkedIn, Twitter, Instagram, anywhere. You can just post a message. We are happy to answer your questions. If some new topic in upcoming sessions, we will cover those topics also. Thank you very much. See you soon next week at the same